All right. Hello and welcome everyone to our Sunday night prep for this week. This is Spectre Trader here with you on this free call. For those who are in the free membership, this is just a preview of what we really have to offer in the premium section. So if you're interested, it might be worth perhaps checking out the premium section in the future. Okay, so start out with, let's see. We will do a brief market overview, and then after that, I'll go over some fundamentals, some economic events, and I will go over like a little bit of things I look for, some criteria to look for in swing trades. And I will give a small watch list for you guys to be watching next week. But yeah, so this chart I'm showing right now is the market profile chart. It looks a little confusing, yes, but it's just a little representation of where value is found in the market in the current and previous sessions. There are some videos on YouTube that goes over the basics of the market profile in detail. So do check it out on the Haikhuu YouTube channel. But anyways, so into market overview. So we did have a really big earnings week this week with big tech names reporting last week. Now, with these important earnings that already have been reported, it's really hard to say what will really happen next. We're not here to really predict. We can never really predict 100% what will happen. All we do as a trader is take what the market is telling us, the data. We use that data to formulate an educated guess, a logical guess, and we use that to execute trades and manage risk accordingly. So this data will always be changing as we keep getting market-generated information as we go. So yeah, going into the markets, this is the NASDAQ. This is the NASDAQ futures. As you can see, the market is quite neutral in the short term at the end of the week. The way we closed Friday was very interesting. We did have a pretty controlled sell-off. I'm not saying we're really bearish, but in the short term, I would say it looks like we're having a pause at the current moment. So with this in mind, with the market being neutral bullish, it's not really good to take any trades in the middle of the range. So you see, this is the price action from the previous sessions, the last 2 weeks or so, about 3 weeks or so. We had a bunch of consolidation on the NASDAQ. We haven't really made any direction. We just have been chopping around in this area, building value up here in the high 13,000s, low 14,000s on the NASDAQ. Same with the ES too. Let's see. ES, we're just building value here. We had a little poke above and we failed. So that is very notable because we did stuff all these buyers. The market did kind of get everyone excited when we gapped up. We had everyone chasing the long that morning, and we ended up trapping them at the highs. We got stuffed. All the buyers got trapped up there, and all day was this heavy selling because if you're up there at these high prices, you're you're not really in a good position if the market starts tanking and breaking below the opening price. So that should act as a notable resistance in the coming sessions. So Yeah, so this is the S&P 500 futures. We're currently hanging around the prior value areas that have been built. See, these value areas are the green areas. So that represents 70% of the volume built on this sort of bell curve. Um, also, very if you're familiar with statistics, this value area is actually using a normal distribution. So if you know statistics, you would probably understand these concepts. But anyways, I'm not going to go into that. Yeah, so now to watch for next week is either are we going to stay in this balance area? If we stay in this balance area, we might have little consolidation days, just some sideways action. This is a really lack of big earnings or anything of a big, I would say, a big catalyst to drive the market forward. We might be a little bit priced in right now because the Fed thing already happened, the FOMC meeting, and we also had a big earnings. So it's really the market might be needing a little rest period where it will just go sideways and prepare for the next move. However, if we do stay heavy and we do have continued selling, we might break below this consolidation low, and then we might see some more downside. And that is where you would want to start consider entering swings, because you never want to buy the market when it's not really moving. But if there's a reaction, if there's a sell-off in the short term, that's like, you could say that's like getting some stocks on sale, to put it very simply. I mean, obviously you want to buy the right stocks. You don't buy these random garbage hype stocks that a lot of people chase. You really want to look at the company financials and see if they're really poised for a position to increase their revenue growth over the future. Because what's very important, especially for long-term investing, is you want to look at stocks that have continued revenue growth over the next following years. Otherwise, it's overvalued. Now, obviously, the market could be irrational, and you could have temporary overvaluation of these stocks, but that's another topic for next time. So yeah, the key level on the S&P futures is 41.6625. If we break this level, then likely we'll have some momentum to the downside, and that will be actually a short trigger if you trade the futures with me. If we break and hold below this level, then I would be shorting any decent spikes, because that tells me that we might have some continuation to the downside with selling. Yeah, I did say we had to look above and fail. Excited people. Let's see. Going back to NQ. Yeah, NQ. Most of the indices are really following relative same price action. The ES is, I would say, is a little bit stronger than the NQ. Right now, the NQ, we really tried to break above the highs, but we lacked momentum, so we stuffed and came back down. Yeah, I would say there's not really much of a opportunity here, but if we stay balanced, you could take quick scalps. But if we break this low on the NQ, around 13,817, I would be very careful, especially in tech names. If you're in some tech stocks, if you're a swing trader, or if you're like a day trader, this is an important index to watch if you're trading those types of stocks. So yeah, if we break this level, then we have some room to fall. So this low is the next notable level to watch if you're looking to fade long. Friday, we did have a very interesting close. We had a sell-off in the last hour. We had a pretty nice drop. We almost cracked the lows, but there was not much volume supporting the downside, and they actually had a pretty nice rally into the close. So what this tells me is that it's really neutral for me, because if they sold it off into close and we closed at the lows, or we made new lows and we closed lower, that would be a very short-term bearish sign. Now, being in relatively the middle of the range, it's like I said, it's really hard to see which way it wants to go. There's not really much of an edge here. So I would say it's good to be cash, because cash is a very good position in these types of market environments. It's always best to stay cash, because you don't want to just jump into half-assed trades. Really, you want to stay patient, and you want to wait for the best opportunities. Otherwise, you're just risking your money for no reason. But yeah, in a bigger picture, I would say we are pretty bullish. So if you're a longer term trader, then I wouldn't really be concerned. This is only for like shorter term swing trading and day trading, really. Lately, it's the Fangman plus T, the Fangman stocks plus T, have been very important to watch to see which way the market wants to go. But right now, it seems like we're having a lack of momentum. So I will go into that in the next few sections. The next section I'm going to talk about is fundamentals. We had an FOMC meeting last week. To basically summarize it, the Fed said they will continue QE and continue buying bonds to support the market. So that means the party is not really over yet. So you could say that easy money is still coming in, which is good, because the market likes the easy money. It's good for the bigger picture at the current moment, because they're not tapering off the buying. Now, when the Fed does taper off their buying, or if they raise rates in about 2 years or so, that's when you want to be careful on the long side, and perhaps you could short the market, but obviously shorting is risky. It's not for everybody, but that is when you want to be careful, especially with growth names, I would say, because with growth you want to see lower rates, because if the rates are higher, it's more expensive to borrow money, right? And a lot of growth names, they are highly leveraged in debt, and being highly leveraged in debt, it makes the debt more expensive with the higher rates. What else did they say? They said acceptable inflation, commodities will, and with inflation, commodities will continue to run. I would say in the long term, commodities will always get more expensive with inflation. Precious metals, I would say, is pretty bullish for the longer term. And I would say crude oil is bullish medium term. Right now, the yields are just chilling right now. So the 10-year yield is just chopping around, not really picking a direction. We did have a spike last week, which did cause the Russell index, which is a small cap index, and the NASDAQ to be quite heavy. But the 10-year is not at significant levels to be risky. For the yields are not really at significant levels to be risky any growth or tech names right now. So I would not be concerned. I mean, I believe we're still below pre-pandemic levels. So it's really, you've seen like 2 months ago where everyone was freaking out about the yields. Really, I would say it's an overreaction to it. What happened was actually the Japanese pension funds were dumping bonds, and that caused a massive global rout in the bonds, because everybody else followed suit, and it caused a little snowball effect. But really, I would say it's an overreaction. What else? It seems like the retail traders that have been chasing the market and speculating heavily in the last year or so, especially with GME and all these different Reddit names. They all really got wiped out, and most of them lost their money. So this is pretty good for the market, because you don't want these retail traders chasing hype and causing volatility. Yeah, you never want to have a bunch of speculators in the market. It's never good, because when you have a bunch of speculators betting on a stock, even if the stock is good fundamentally, once everyone is on the long side, it gets very ugly for the stock, because once the selling happens, it gets dramatized. Normally, let's just say it would have a pullback. When you have everyone on one side, you'll have an even greater pullback, because they're all running for the exit. Let's see, VIX. VIX is a measure of the cost of hedge. You could call it the volatility index, but it's not super accurate to call it just a volatility index. It's a cost to buy options, really. But as you can see, VIX has been contracting for the last few weeks, with the market moving up in the past few weeks. But since the market is at a very interesting position, I would not be surprised to see an expansion in volatility at these current levels if we were to lose important key levels. Now, I will go over some important economic events that you want to write down on your little schedule or bulletin or whatever. These are very important to watch, because they could affect the market, obviously. So on Monday at 7 a.m. Pacific time, we have the ISM manufacturing PM. And at 11:20 a.m., the Fed chairman, Powell, speaks. So we could see some volatility at 11 a.m. Pacific time. Wednesday at 5:15, we have the ADP non-farm employment change. That is important because it estimates a change in the number of people employed during the previous month. It's a gauge on economic health. People employed. 7 a.m. on Wednesday, we have an ISM services PMI. It is a powerful indicator for also economic health. If the numbers comes out above 50, it indicates we're having expansion, to put it very simply, and under 50 means that we're having a contraction. Also on Wednesday at 7:30, we have the crude inventory, which is a change of numbers of barrels of crude held in inventory. This is very important for any oil-related names like Shell Company, Exxon, Chevron, any of the super majors and pipeline companies. On Thursday, we have at 5:30 a.m. Pacific time, we have claims, pretty important number. It is a number of people who filed for unemployment insurance for the first time. And Friday at 5:30 a.m., we have average hourly earnings. So it's a change in the price businesses pay for labor. So that could affect businesses' profits or expenses. The non-farm employment change is also on Friday. It is a change in the number of people employed during previous month. The unemployment rate also comes on Friday, which is the percentage of the total workforce that is unemployed, and actively seeking employment. So yeah, these are all very important economic data that is coming up next week to watch. Let's see. Now I'm going to go over some swing criteria I look and when I want to enter a swing trade. Let's see. Let's pull. Okay, Twitter. Yeah. So, for those of you who don't know the way how I swing trade the market, I generally look for a little checklist of things that I look for in order to sort of find the best stocks to bet my money on. So the first one I look for is a high institutional ownership. So what I mean by that is I look for stocks that have a high amount of institutions who are in this stock, because something with a high institutional ownership, even if it has a pretty nice sell-off, you know that all these, as long as there's no major fundamental problems, you'll have the institutional support, and it could really, if the stock drops enough, it could cause sort of an institutional buy program, and any decent percent down, you'll most likely see these institutions start buying in. It just keeps me safe and also keeps the risk relatively low for what I'm doing. Another thing I look for is a sell imbalance. So if, for example, I would not be buying a stock if it's just chopping around in a sideways consolidation motion. There's really no edge in this because it could go either way. It's 50-50. The odds are not in my favor. Now, if something like Twitter, which is, I would say, a pretty decent company, something that it's not like a small cap or penny stock where you could easily get destroyed on. You know, if you have a pretty decent sell imbalance where we have a pretty nice gap down and some selling, that's a pretty nice drop from 67 all the way to 55. Likely, I don't think we'll have much of a continued sell-off at this point, because the principle is, according to auction market theory, is the market can't go up or down forever, right? If the market has a great sell imbalance, there will always be rebalancing in the market. And what I mean by that is, you can't have continued selling forever. You'll always have exhaustion of the sellers, and then you'll have a little rebalancing bounce at the very least. Or, if we have some institutional support, you could see it actually recover. If there's no fundamental problem with the stock, there's really nothing to be concerned about. Time is on your side at this point. So generally what I look for is, I personally like to look for at least a 10% drop or more. Any lower than that, the risk reward is not really worth it to me. Now, if you're more of a breakout trader, then obviously this will be quite different. But what I do is I try to do a counter trend sort of reversal move. So the way I find my targets is I would go long, let's just say at 55. Worst case scenario, it comes down a bit. I'll be adding 53s and lower. And when we had a rebalancing bounce, my targets would be usually if we have a gap down, then the gap fill and previous breakdown area or previous highs. Another criteria I look for is I generally go for mid to large caps, even mega caps, but usually they don't move enough for an opportunity. But when they do, then I would be entering for sure. But generally, I look for mid to large caps because they have enough market cap where it's not easily manipulated. Something like a small cap, it only takes a few $1 million to really move the small caps. So that's really dangerous to me, because it takes billions and billions of dollars to really move a large cap. You can't really move a large cap unless you have some really, really heavy selling. So really, the odds are in your. And another one I avoid is energy. Energy, I would say, unless you really know how to trade energy, for most people. I'm not saying everybody, but for most people, it's really a money graveyard. Another thing I'll look for is for context. So if the Nasdaq or the S&P is really heavy and it's selling off and it keeps making new lows in the consecutive sessions, then I would be more patient with my entries. I would wait for a real overextension on these names in order to enter long. Now, if we're making all-time highs and we really look extended on the upside, I would be very careful entering any long positions, because just if we're pretty if the S&P is going parabolic on the daily, we had a pretty extended move up without any decent pullback. Going long at the highs is not very smart, because when we pull back, you get caught on the pullback, and it's just not very fun. But yeah, that's just a basic swing criteria list. Obviously, there's a little bit more to it. I'm not going to go too much into detail over it. I don't want to keep everybody in this call for too long. So the next thing I'm going to go over is my watch. So like I said before, we're in a consolidation on the Nasdaq and the S&P. There really is no edge in the market currently, but I am watching the Fangman plus T. If they could get a decent extension, a little bit more of an extension to the downside, then I'll be interested in starting a position. Doesn't mean I'm going to go full clip and go all in. No, I'm going to slowly start scaling in if they have a decent pullback, because I want to see how they set up for next week. Right now, it's rather mediocre, I would say, to enter at these levels. So this is Microsoft. They had good numbers, and we had a pretty nice pullback despite having pretty good numbers. We had a pretty decent gap down, but really, I would say if we have a decent pullback, perhaps into the mid 240s, I would start a position. But really, the area I really want to buy at is the low 240s, where we broke out from, and probably near the bottom of the consolidation range, because that would be a drop from 260 all the way down to 240s and below. That would be like 20 points plus. That's a trade I'll take any day, because it is Microsoft. Fundamentals are good. And there's really buying at these prices, you really should have the wind at your back. As long unless the market crashes, of course, that's then that would be a different story. But I don't see any reason why the market should crash at the current moment. Another stock I am looking at is Facebook. Definitely not going to buy at the highs. We did have a pretty nice gap up, but I do want to see a gap fill, perhaps. Maybe at 310s if we come back down. And the low 300s, I think, is a good place to really go heavy in. And you never want to buy at the all-time highs. That's not very smart, I would say. You might make money. You might get lucky a few times, but buying at the highs, you don't really have a good market position. You don't really have a good position in the market, and you have a lot of risk to you if it were to come down. Another stock I'm looking at is Apple. Apple, I'm not going to buy here. Of course, we're at the consolidation low. So if we lose this level, I would be careful. Let's look out below because there's not really much support until we get down to the 120s. So if we were to crack this low, I'm not saying it will. I'm not predicting anything. I'm just saying if it were to crack this low and go to the 120s, oh, for sure, I'll be a buyer. Apple always continues to see revenue growth, and fundamentally, Apple is a very, very, very extremely strong company. Another stock. I'm actually in Twitter right now for a swing. I did start in the 55s. Sorry, 56. 56, 62 is my average. And my plan is to add at 53, about to 53.30s. Sorry, 53.70, sorry, at the little consolidation area here. We did have a pretty decent gap down, but the data that was posted, I am not really too concerned about. It should have a pretty nice retracement bounce. My target will be the gap fill. And also, I will sell a small piece for 5% gain, whatever my average is, and I will sell probably a majority at the gap fill and the rest at the highs. And it's worth holding some for the long term, just see how it goes. Another one I'm in is not a FANG stock, like eBay. eBay had a pretty nice gap down. If eBay could get a little more selling, okay, there's two ways to play this, really. If you want to play breakout, if eBay were to break above 57.34, that would be a long trigger, and you could enter long. Obviously, you'll be making less, but you'll be waiting for confirmation, because if we hold above this, we'll likely fill the gap and should be good for a pretty nice gain. But if you want to be more patient, then perhaps if we could get down to this low around the 53s, I would consider going long. I'm currently not in this one right now. I want to see how we set up for next week. Another stock I'm in is Marvell. We're at a consolidation low. We are down quite a bit from the highs. It's really not bad to enter here. If you want to keep the risk tight, you would probably enter here and stop out below this consolidation low and wait for lower. But me personally, I am waiting for lower. I want it with NASDAQ being in the middle of the range. It could go either way, 50-50. So I'm just gonna be more patient and wait for a great setup. Jack Henry, JKHY. If we could go back to the breakout level in the 150s, we should have a pretty nice bounce. I would enter Jack Henry at that level and lower. And last but not least, I like Discovery. This was part of the Archegos margin call where they were highly leveraged in many of these names, and they ended up getting essentially margin called and stopped out. So they caused a pretty nice drop in the market. Now, Disca, I would say fundamentally it hasn't really changed, but you do have a massive sell imbalance, and it's pretty oversold on the daily. So it's really not bad to actually enter here. And I mean, I will be surprised if this thing doesn't bounce, really. So and yeah, that's pretty much it for the swing list. Now, last but not least, I will go into Q&A. Is there any questions from anyone in the chat? Let's see. Sai says there are some videos in the last couple of days from YouTube regarding some new contracts. Yeah. Palantir is something I am holding long term. Whatever happens in the short term, it's really noise to me. I would not necessarily pay attention to the YouTube gurus. They could be, there is some conflict of interest. And the problem with Palantir right now is it's a pretty popular stock, so it was pretty overcrowded. You have a lot of retail guys chasing this name, and that's not really it's not good to have everyone on one side. I mean, fundamentally, I would say it's a pretty decent company, but with everyone on one side, it could get a little bit dramatic on the sell side. But so far, it's holding. I am swinging Palantir. My average is 25, so I'm not really too concerned. Obviously, if Palantir were to break, I believe, a 21 level, yeah, if it breaks 21, more like 20s. If it breaks 20s, then we could see like the 15s, because we do have a pretty big what's the word, air pocket here. Really, there's not really any support here. It's a big air pocket, so I would be very careful. But no, I don't see anything that's really concerning. It looks like it's just consolidating here and setting up for a move. Someone said bullish until when? I am bullish, and I am quite bullish until a few months. Then I will see what happens with. I believe the Jackson Hole Symposium is in a few months. That's a very important event. I know there's some big boys hedging against the Jackson Hole Symposium. They're betting on that Powell will taper off or stop buying. And if you're paying attention to the order flow, actually there was a lot of hedging. You could see, like, I believe on Tuesday or Wednesday. It's either Tuesday or Wednesday. I saw on the footprint chart, there was somebody selling $600 million worth of ES contracts. So yeah, there is quite a few big boys betting on the downside. So it's very interesting to. Now, I'm not saying it's going to go down. But yeah, you do want to be worried to see if something changes. Obviously, you'll be watching. Most likely, I don't think he will change it in the near future. But I would, in my opinion, I would say bullish until the Fed decides to raise rates. That would be in about, I would say, 2 years, when they decide to raise rates. When the economy gets too hot, then they will have to raise rates to cool down the economy. And that's when I would be out of any long positions. And if you are more risky, you could short the market. So James says, where do you find what the big boys do? So you could watch, well, there's this, there are some premium, what do you call it, services that let you see the inflows. You do have to pay money, but you get to see any big orders on options or where like all the money is into, which sector, which stock. It's really it's really only available if you're able to pay a little premium for it. Free and tone. Yep. Another one I used to look at some discrepancies in the market is this footprint chart I use. It's an order flow chart, so it shows what's happening inside each 5-minute candle. And during the market open, when the market was open last week, I observed big sell orders coming in. Let me find a screenshot for it. Actually, I think I posted it like a few days ago. Give me a second. There we go. Let me know if you guys can see that. Yeah. So this is a screenshot I took of my footprint chart. This was on April 27th. So that would be Tuesday. On Tuesday, I observed 2,800, almost 3,000 contracts being sold on the order flow. And that's a pretty big order. That's about $600 million. And yeah, the market was pretty ugly all day. And what was very interesting is this was the day before the FOMC. So it seemed like the guy was perhaps hedging himself. And it is very interesting because it was very interesting that he was hedging, because for an FOMC that everyone expected for things to be unchanged, the market was certainly positioning itself for something. I mean, obviously it didn't happen, but it's just very interesting nuances to observe in the market. Is there any more questions? Let's see. Oh, okay. Black. All right. Well, is there any more questions before we end this session? Don't be shy. I'm free to answer any questions. So ask away. I don't mind.
I had one for you.
Sure.
So when you were talking about them holding like specific levels and such, what do you consider like a break of that? Like how much of a price movement are you looking at for it to be considered a break?
So, okay. So what I generally watch is not just a break, because it could obviously break the level and then just reclaim the level, and that'll be like a failed breakdown. What I would generally watch is if we let's just see, Nasdaq. I don't consider the Globex session really important, so the overnight that's not really important to me. So let's just say, yeah. So Thursday will be important. This is the RTH session. If the low would be 13,800 18. If we were to crack below it and hold below it, as long as we hold below it, that is sort of a warning sign to me to be careful on the long side, because we just failed to hold this level and we're staying heavy below it. We're finding value lower. So that gives me the sign to stay away from the long side, maybe short some pops when we see some bounces. But yeah, as long as we hold below this level, then that's what I consider a breakdown. If that really makes sense to you.
Yeah, that makes perfect. I was gonna kind of ask like what time frame. Like, I mean, obviously, if it broke below for like less than a minute, that's not really considered a break. So, like, how long would you be looking for it to be like holding under that for?
Um, I mean, if we close below it, that's very, very notable. Um, Obviously, we could be heavy below it for a few hours, but if we reclaim it, so if, let's just say, hypothetically, next week we were to come down, we crack this level, we start holding below right here for a few hours. Like let's say Monday morning, we're just holding below a few hours, but then you see the price action start creeping back up, and then we like reclaim it. We like reject. We come back above these levels. That shows me that the sellers really lacked momentum to the downside. Then I'll be less bearish, because even though we held below it, the fact that we reclaimed this level is very notable, because if the market was heavy, they'll just keep selling it, right? They'll just keep selling, and this thing will just keep going down, down, down until we reach a more notable level, which would be the next level will be like down here, which would be 13,780. If we don't even like get close to that, we poke below and if we reclaim, that's just a failed breakdown. Does that make sense?
That's perfect. That's exactly what I was looking for. Thank you.
Yeah, because a lot of people they say, oh, we poke below this, we poke below the low, we're gonna go down, and they get very biased to one side. They say, oh, it broke. Now we broke support. Now we're gonna go down. Well, but they're failing to look at the context here. You look at the order flow, you start seeing some buyers coming in, some absorption. Even though we're selling like heavy, super heavy on the bid, but it was like somebody buying it all up. We don't really move that much. Then that means like there's a big buyer taking all the big sellers out, and it likely will bounce if there's continued buying. And yeah, I mean it's very important to look at different things like order flow, how much volume is at the lows. So it also will be very important if you have a market profile chart. If we were to crack and take out the lows, but the volume stays very light, and the volume stays very light, that means we're not getting really acceptance to we're not really getting that much acceptance at the lows, which is very notable because you really need heavy volume to continue low. But if we have very light volume, most likely we're going to reject the lows and come back up. If that makes sense. Somebody asked futures question. When I hold futures contract, is there a beta decay? No, there's no decay. It's really simple. It's the only thing that matters is whether or not the price where you bought at goes up or down. So if it goes up, you make money. If it goes down, you don't make money. No decay to worry about. All you need to do is manage risk, make sure you don't blow up, and make good trades. So why don't people play futures instead of calls? Well, I don't think a lot of people know what futures are. I ask a lot of people, a lot of people ask me, so like they don't even know what a future contract is. You're like, futures? What's a future? Is that like options? Is that forex? I don't think the average person futures are. They're not really highly marketed. If you look at all the gurus on YouTube and social media, they're all promoting like something like penny stocks, options, or trading stocks. No, there's not really any gurus promoting futures, because if I mean, you can't be. I mean, a lot of these gurus online have these BS like claims. You know, they say we can make you. I made $2,000 into $10 million within 6 months. You know, but if you say that about futures, then you're gonna have what do you call it? The futures regulators come to your door and demand like, hey, are you really making this much money that you claim on YouTube? If not, then you could be banned from trading futures. They're really strict with futures, so you can't BS. That's probably why you don't get a lot of futures gurus, and not to mention, not many people trade futures or know what futures are. If you know if that answers your question, banana. Alan says opinion on AI. C3 AI. Daily it is consolidating. Hang on, let me take a look at this company real quick. I want to see what they do. Let's see. Institutional ownership is 41%. Short float 14. Short float not really significant right now. Market cap is 6 billion ish. Let's see. C3 AI operates as an enterprise artificial intelligence software company, blah, blah, blah. Basically is a platform to develop AI applications. That's pretty cool. Net income. So it appears that they're losing money. In my opinion, I would be sort of careful with this. If you're holding this long term, I mean, I would have to look at the SEC filings, but just eyeballing it, it seems like if you hold it long term, that's sort of a gamble. But obviously, you want to see this company become profitable, or at least increase profits or increase revenue. Otherwise, this company is screwed. But for swing trade, yeah, it is quite oversold. It's down from 180. Is there any news on this? Disappointing results. Okay, wait. We start selling off in February. Seems like this is one of the stocks that was taken out by when the yields were rising. So I mean, obviously, this company is probably highly leveraged in debt. So being highly leveraged in debt, you don't want to see the rates rising. It's expensive to borrow money. That's why we probably had this massive sell-off. Any growth names were just most growth names were killed. Some of the good ones recovered. I would say it's a good swing trade. If you want to do a shorter term swing, your risk would really be under 58. So probably scale into it. You're kind of buying in the middle of the range if you're buying here, but if you got a lower average, I think that's a pretty decent buy. You could there's two ways to play it really. If you could wait for a breakout above 73, that's a safer one. You make less money, but it is safer because if we break above 73 and hold, then we should probably test 83 is the next really resistance level. If we break out, then yeah, 83 is should be reached. Yeah, if you breaks below this level, better cut it off very quickly. I wouldn't hold on to it because I mean it could go lower. But yeah, it is pretty oversold. So I would say this thing should have a bounce. Long term, I would be. Let me know if that answers your question, Alan. All right. Is there any more questions before we end this? Alan said I was asking for another guy. Oh, okay. Sorry. I guess I misread that. Well, anyways, thank you all for joining our Sunday night little webinar for the market preparation for the next week. Thank you all for coming, and I hope to see you soon in the premium. Thank you.